Good evening. It's Vijay here. It's a Sunday evening. Let's look at what happened last week and let's try to guess as to what will happen next week. Last week was what shall I say, a spectacular week with the Nifty closing at an all time high. And it did an all time high during intraday, confusing and confounding both skeptics and the bulls alike, and of course, shattering the uh, dreams of the bears. The title of today's topic is When Facts Change. This is attributed to John Maynard Keynes, who was also a very avid stock market enthusiast and used to trade regularly. So he did not have any bias, any strong bias. So he always used to say, when facts change, I change my mind. What do you do, sir? If you observe, and I have been very cautious in the market subsequent to the fall of June 4th, because the government came with a very reduced number of seats. If you had asked somebody in, say, even one day before the results came, what would happen? In fact, there are a lot of surveys, a lot of analysis, a lot of analysts came about their views that should the BJP get less than 300, what will happen? So people had said that there will be a significant correction of 15%. Nobody had dared ask them what will happen if they get less than 250, which is basically getting significantly lower than a majority. So there were some people who said there will be a crash because the market is overheated, overbought, it's in a bubble and all that. So what happened? The results came, and the results were amazingly far away from what most people expected. And there was a fall. There was a fall about 8 to 9% on the bank nifty and about 7% on the nifty. But what happened later? One day fall, and then it started moving up. And a few days later, it went and crossed the June 3rd high, that the high which was made on the day of the exit poll results. Now, I was cautious till then because you see, there has been a case in 2007 8 when the market in December 2007 it fell down, and then it went above the December 2000 levels in early January 2008, made everyone feel bullish, and then it cracked badly. So I was looking at that pattern and I was wondering whether we will repeat a similar manner. So it is good to be cautious at that point of time. But once when that pattern broke and the market started moving up, then you know that something has changed. Some facts have changed. The facts could be that people still believe that this government is going to be stable because they have got allies who are unlikely to ditch them. So, which means that a government led by the BJP with 240 seats is the highest ever in a coalition government till now. So when other coalition governments like the Vajpayee government or even the Manmohan Singh's government survived, the Manmohan Singh second time UPA 2, Congress got only about 209 seats. So here you have BJP getting 240 seats. So the same logic must have been applied by people in the know, or people who are the money bags, as I would call them, and they would have come to pump in money. Now that is point number one. Point number two is you had the budget. I had mentioned last week that Nirmala Sitharaman will not do anything to hurt the sentiments. So, in fact, I titled it as When I'm Here, Why Fear? Now, what happened in the budget? The budget came up with at least four announcements which were detrimental to the stock market. Overall, I still think the budget was a good budget, excepting for these four. So, you had short term capital gains, tax increased, long term capital gains increase, which was a complete surprise. And then you had the security transaction increase. Then you had restrictions on gold, gold and silver, which were removed, which meant gold ETFs and silver ETFs went for a toss. And then you had also had something on real estate where they removed the indexation part. So if somebody would have told me one day before the budget, these are the things which will come, then I would have expected that there will be a significant correction after the budget. Because many times in the past, there have been significant corrections. So what happened? The market struck that off. Later in the week, the US market started falling, and you had Nvidia kind of stocks which have fallen 40% from their highs. You had Nasdaq falling 600 points on a single day. You had Dow Jones oscillating in a 1,000-point range. You had S&P falling 60 points, which is a very big fall. In fact, last week's one-day fall was not seen entire 2024 and 2023. The last time it was seen was in 2022. So such a big fall, and yet what happened to our markets? Our markets shut them. So what is it telling us? That some facts have changed, which we may not be privy as far as the outside world is concerned. So the people who are investing in India, whether through local mutual funds, AIFs, PMS, or the foreigners, they've all taken cognizance that there is something to be gained by investing in India, even at these so-called lofty levels. So therefore, they are pumping in money. In fact, FIIs last 12 days, I mean, if you take the last fortnight, the first 12 days of the fortnight, 11 out of 12 days, they were net buyers. My analysis has been that whenever FIIs have been net buyers, the market has only gone up. If the FIIs are net sellers, it doesn't mean market will come down. So that is the track record. They sold for 2 days, actually only on Wednesday. Thursday was settlement day, so there is always an adjustment. So one can never know what happened on the FII actual buying selling because there are position adjustments. So Friday again they came back with a bang and they bought. Now, how can you ignore such facts? How can you ignore such facts? Now, I'm a person who likes to look at have something similar, some pattern similar has happened in the past. So I would like to share a pattern which is here. Take this. Okay. Now look at this pattern. This pattern is in 2021. 2021, where we had the second wave of the COVID, which was much more severe, and the markets were falling somewhere in March to around April, May, and then they slowly started rising. But they just crossed their highs only after mid-June. This is a weekly chart. Okay. Then they hung around between in the month of July. Entire July, it was hanging around mid-June to end of July. So what would one have thought that at this point of time, COVID problems were still there. Corporates were not doing such great things. We would have expected that the market should now start coming down because this is an irrational exuberance here. See, this is an irrational exuberance. So if this is irrational exuberance, the market should have come down. So what actually happened? You see here, it went up by 16%. You have had COVID problems. Corporate results are not great. Inflation was raging globally. We could sense it that the Fed will come with the interest rate hike sometime. Yet the markets took off. 16%. One would not have dreamt that it will come up by 16%. Same negative conditions. People were scared. Yet the market is going up. It took a break. Then we thought it will turn down. There it took off. Now come to present time. See here. The market had gone up irrationally, we felt, after October, November. If you take, say, from March, it just took off. Why March? Okay, here. It took up, here. So from March, it kept on going up from 18,600 and it took rest about 21,000. So what would one have thought? That now it is in a narrow band, somewhat similar to what happened in 2021, and one would have expected a fall, and it happened. The fall happened on the budget day. So you can be sure that all of us should have thought, oh, it is going to be different this time, because in 2021, the fall did not happen and it went up. But lo and behold, it bounced back. So if you take the same 16%, I'm not saying it will repeat, but I'm just saying if you take the same 16% after consolidation, then you should expect 27%, 27,000. Now, 27,000 looks ridiculous because we are sitting at 24,800 and odd. 27,000 looks that we have lost our minds. But facts have changed. FIs are buying. The election results are done and dusted. Same thing with the budget. You've seen global markets fall, Indian markets not falling. So something has changed. And FIs have come back, as I said. Results are okay. Some of them are very good, like ICICI Bank. Some of them are not that good, like IT stocks, but yet the IT index is going up. So when facts change, we should learn to change. So what I am doing is we are fully invested. We have kept the 24,200 as our stop loss. This is our stop loss, 24,200. See here? Somewhere here. Yeah. Why this? Because it has been, if you take the daily chart, okay, it's not coming for what reason, I don't know. But nevertheless, if you take, yeah, I think you get the daily chart here. Let's try once more. For some reason, yeah, here you got it. No, you got still the weekly. Doesn't matter. What I'm saying is you keep 24,200 as your support and trade. We went to 24,200 levels on Thursday, incidentally. So it's not that it is very far away. So we need to have a trailing stop loss. Market is probably entering into a mad phase. We don't know what the targets are. When the supply meets the demand, then we will see another consolidation. Right now, most people are on the other side. That is, either they're skeptical, or they're in cash, or they're short. The people who are going long are very few and far between. In such a case, it is always better that you have a trailing stop loss and ride with the market. I would definitely not like to short this market. I know things are going berserk. All that is fine. But at the end of the day, the price is telling me that do not go short in this market if you don't want to go long. Anyway, I don't trade the index per se, but the stocks which we hold are all, as I keep mentioning, in around 15 PE to 20 PE across different sectors. So this is what history has taught us. And this is what John Maynard Keynes said, that if facts change, what will you do? I will change. So I hope people have got some message from this. Thank you for joining me on this Sunday evening. Have a good evening. Thank you. It's Vijay signing off.